Hello everyone, and I hope you all are doing great. So our topic for today is IAS 16, which is property, plant and equipment. So from the name itself, we all can understand that this standard is basically about the recording of the assets. And talking about assets, we all know, we all accountancy students have heard different kind of names attached to the assets, like we have fixed asset, we have current asset, we have tangible, intangible, etc. So now we want to know within this standard that which kind of asset do we classify here. So in broad terms, I-16 teaches us that what kind of asset do we classify under this standard and how do we treat them. Hence, there gotta be some way, right, through which we can understand what kind of assets we classify under I-16. So, as per I-16, we have a recognition criteria of 3 points. So, if an asset falls under those recognition criteria, then it can be classified under I-16. Perfect. So the first one is, I'll just go through the names. The first one is definition of property, plant and equipment must be met. The second one is cost slash fair value must be measured reliably, very important. And the third one is probable future economic benefit must be derived from that asset. So we will be going through these 3 points individually and I'll be explaining briefly. Now the first point is definition of property, plant and equipment. Talking about definition of property, plant and equipment, we have further 3 points for this, so don't get yourself confused. The first point is, alright, so before explaining the 3 points, if these 3 points are fulfilled, then definition of property, plant and equipment is complete. Now the first point is an asset needs to be tangible, it must be non-current and it must be held for use. Now what does tangible mean? Tangible is anything which has a physical existence. For example, there is a chair, you can touch the chair, you can feel the chair, so that means it has a physical existence, and so the chair is tangible. Simple. The second one is non-current. Non-current means, for example, if a business is obtaining any asset to use in its own business operations, then you can say that that asset is non-current. In other words, you can also say if the business intends to use the asset for more than the period of 12 months, then also it is a non-current asset. And the last one is held for use. Again, it is quite similar to non-current, which means as the business intends to use the asset for its own business operations, so it is fulfilling the criteria of held for use. Hence, if all these 3 points are fulfilled, then definition of property, plant and equipment is met. Perfect. Now the second recognition criteria is cost or fair value must be measured reliably. For instance, I bought an asset A and you ask me about its price, so I say, for instance, it is $100. So and that means the cost can be measured reliably. Obviously, you need to be sure about what you're recording in your accounting books, right? So the cost or fair value must be measured reliably. And fair value for now, in vague terms, you can say is the market value of an asset. So if these two things, either cost or fair value, are being measured reliably, then it is fulfilling the second recognition criteria. Now the third and the last recognition criteria is probable inflow of future economic benefit. Inflow is very important, sorry I missed on that. Now this means that an asset a business owns is helping a business to obtain revenues, profits, etc. Now it is very important to understand it does not necessarily means that an asset is helping directly to obtain revenues or profits, etc. Right? Don't get yourself confused with that. For example, business A owns a computer, so the business is using that computer to record the transactions, to it is helping in the business. So it is not directly helping the business to obtain the revenues or profit, but indirectly, in a combined manner with other assets, it is helping a business to obtain revenues and profits, etc. So if these 3 points, if these 3 recognition criterias are met, that means the asset can be recognized under IAS 16.